Hey guys, I'm James Sinclair. I'm a UK business owner or entrepreneur here in the United Kingdom, obviously. And I make loads of videos, about business advice and success, things that can help you grow your business. And today we're going to be discussing how to raise capital for your business. I've literally raised millions and millions of pounds. I reckon I've raised near enough £10 million over my career to invest in our businesses and grow our businesses. Right now I employ over 400 people. We do over about 12 million gross in sales every year, and we borrowed from banks, from investors, from leasing companies, crowdfunding. We've done a cocktail mix of them all, and I'm going to go through how you can raise money for your business, because there are some things that are needed when you're going past the let's borrow 10, 20, 30,000 pounds or dollars loan to grow a small micro business. I'm talking about people here that are going to start employing people, the differences of how you need to raise capital to grow your business and fund your ideas and get you to the next level of where you want to be. So let's move over to the flip chart. I've got some headings up here that will give us some good ideas of what we need to do. Now, first of all, when we're growing our business, and we need to think with the end in mind, and we need to have a great plan. This is something that people do not realise when they go and ask for funding. They don't have a great plan, they don't have clarity, they don't have an end in mind for what they want to achieve. And that turns a lot of investors or people that are going to lend money to you, because anyone that's lending money to you, whether it's a bank or an investor, they are investing their capital into your idea, into your management, into your expertise. And what do they want? They either want a return on that capital or they want to get paid back. So we need to make sure that we've got a great plan, and it's documented. This is really important. It can't be up here. It's got to be written down, typed up. It's got to have a lot of effort into it, especially if we want to raise a lot of capital, that will say what we're going to do with that capital, how we're going to get a return on that capital. That's for you, so that you can prove to your investors or anyone that lending you the money how you're going to get a return on that capital, what you're going to do with it, and what your business looks like when it's finished. This is really important. This is the key difference that you'll have over most people that are going to raise finance. If you've got a great plan, documented in detail, that shows the end in mind with loads of clarity, certainty and expertise woven through the document. Basically, the best way to think about it is you're building a house with an architect plan of what the house will look like at the end, and you've got that full set of architectural plans that's got you the planning permission that's allowed you to do it, the funding to build the house. That document is so crucial. It's so important. It's a really good thing for you to have in your business because it'll keep you on track. So think about this. Would you build a house from scratch without a set of architect plans? You'd be very foolish to do that. It's really good that you've got it really well documented, and the same is the case for business. And this is the top tip in helping you raise capital for your business. You can have a really good documented plan. Now, our one is about 10,000 words, and we update it every 5 years for our group business plan, and we do a separate micro business plan, if you like, for the year ahead every single year, which is documented, written down. We share it with our team, we share it with the people that lend money to us. So we've got that really good document. That is rule number one. You must have the grand plan. Okay, so let's have a look at now some of the different types of ways that we're going to borrow money, the different types, okay? So we've got our angel investors. These guys, they want to be lending to you know, anywhere between 50 and £500,000. And these guys can be quite good because not only will they give you cash, they're also going to give you a bundle of expertise, which will be able to grow your business. And quite possibly, in many cases, they'll be able to open doors for your business, but they'll want a return on their investments, which will be much higher than a bank would lend or a peer-to-peer lender. These guys really want to see the growth of the business, and they usually work to 5-year exit plans. So angel investors can be really good, not just for capital, but also for giving you expertise and opening doors for your business. Peer-to-peer lending is something that's really grown over the last 5 to 10 years, and it's getting bigger and bigger. People like RateSetter in the UK, so they take money from high net worth individuals and they invest it on their behalf, and then it'll be a higher rate of interest than a traditional high street bank, if you like. Similar to these guys, crowdfunders, so in the UK that would be Funding Circle. They're again taking cash from people and they're investing it on their behalf, but also taking cash from institutions. So they, some of these guys will take money from the governments or local councils and invest it on their behalf, so they get a higher rate of interest. So any of these guys will be looking anywhere between 8 and 15% APR, so that's the annual percentage rate. We'll come to the bank last. Leasing, this is something I've done a lot of in my career. So you can lease equipment, means that the security is in the equipment, so it doesn't tie up your bank security if you've got that, which is valuable really in my opinion to buy freeholds and longer term growing assets. But leasing's a really good thing. It's quite tax efficient if you can get the right lenders. Some of them are very high rates of interest, so you do need to shop around when you go for leasing. You do need to shop around. And then you've got investors as well. I've kept, I know angel investors, but I also want to talk about private institutional investors. So this could be government investing into you. It could be other businesses investing into you with their cash because they want to buy into your expertise to help them grow their business. And this could be public pension money, this would be the higher level of investors, people that are going to be lending maybe or investing $1 million plus. So this is much bigger investment than your angel investors. Over here I've got venture capitalists. These guys will be the people that have backed people like Twitter, Facebook, LinkedIn. So you're looking at those guys. Then there's public money. I don't actually I've never done public money, but that's when you sell shares in your business on a public offering. You'll be wanting to make sure you're at the bigger end of business, but it's worked for lots of people. I can't give any expertise on that because I've never done it. But all the others, I've done angel investors, peer-to-peer, not peer-to-peer, crowdfunding, bank. These two are very similar but slightly different. That's why I put them up there. Leasing, and now we're going to go to the big boy, the bank. This is where I borrow most of my money. This is where I prefer to be. It's the lower rate of interest. You can usually pay it back over a longer period of time, and if you start building a great relationship with your bank, you can keep going and grow your business and think longer term. So they're the main sort of people that I know of that will help you grow your business in terms of funding. And now we're going to look at the things that they want and they all want when it comes to borrowing or lending money to you. Number one, you've got to think with the end in mind. What is the end? What does it look like for them? How are they going to get paid back? What does your business look like when it's finished? Make sure you've got clarity of plan, certainty in what you are and what you want to do with this cash that they're going to lend or invest into you. And don't forget this one. This is the most important one. This is what they all want. They want to know your expertise in your sector. Make sure you talk about your expertise in your sector. If you're a dentist and you want to start a retail business, that don't fit too well. But if you're a dentist and you want to start a dentist surgery, you're promoting your expertise, it will be far easier to borrow the money. Now, let's have a look at the things that these guys want. These are the big hitters that they're always going to want when you're borrowing money or having investment. They want to know about serviceability. This is the banks. This is the big one. How are you going to service the loan? So if you're peer-to-peer crowdfunding or bank funding or lease funding, how are you going to service that loan? What history have you got? What documents that prove that you're going to service it? Have you seen other people doing this, and can you say, look, these guys have done it, we're going to do it, we're in a better location than them, this is how they service it, this is how good their business is, this is our history. Prove serviceability. This is getting more and more important actually, especially as the banks are not the biggest lenders. Well, they are the biggest lenders, but there's other people coming up, these peer-to-peers and these crowdfunders. They're taking on the banks at the moment, and they're getting more and more business because of their speed and efficiency. But all of them will want to know about serviceability. How are you going to service the loan? Next thing, make sure you promote the management in your business, especially when you're going for bigger loans. Who's going to manage this business? Is your business just key man? Because that worries some investors if it's just one man or one lady running the whole shooting match. Make sure you talk about your expertise and management around your business. Who's your head of accounts? Who's your head of HR? Who's your head of operations? Who's your head of sales? Who's your head of marketing? Now, if you're doing all of those things, you might want to say, look, eventually we're going to bring management in with this funding. These are the type of people that we know that we need. We haven't got them right now, but if you can explain the management that's missing and the management that you need, that's just as good, because you're saying these are the problems that we've got in our business and these are the problems that we've got to solve. And every time we go through this exercise, they might say, well, look, go and sort that out and come back to us in 6 to 9 months when you can prove a bit more that you've achieved. And the last thing, this is what everyone thinks that funders want. They do want it. It's security, but it's not as important as management and serviceability. When you go to borrow money, if you've got all of the security in the world with zero expertise, zero understanding, zero clarity, zero certainty, why would you lend the person the money? You're just going to have to take the asset away. Because at the end of the day, people just want the loan repaid or the serviceability repaid or the investment repaid. They don't want to take your security, they just want to be paid back. So think serviceability first, management first, security last. If you've got security, you're always going to get better rates. Yes, it's super important. Don't tell you it's not super important, but serviceability and management are the key two factors. So guys, that's my little quick video on the things that you need to get your ducks in a row when you go in to borrow funding or investment for your business. I'm James Sinclair. Hope you enjoyed the video. Thanks for watching. Ta-ra for now.